Well, it's great to have you. This is the battleground, I mean, in some ways for the economy. Tell me why you don't think the premium is warranted.
Yeah, thanks for having me. Again, I think you said it earlier on a relative basis, after the stock hitting kind of, as you said, over a year high. Number two, oil prices hitting a multi-year high. Our call is based on oil prices going down about 10% next year and then 10% thereafter. Based on that, if you would look, we think there's going to be much better names that hold up. And if you're looking at today, you mentioned earlier, we just think on valuations. If you look on either free cash flow yield or EV to EBITDA, so on an earnings or free cash flow basis, we believe there's cheaper stocks today to play.
So your biggest concern is you think oil prices are headed lower. So for someone who wanted to hold the stock here, you think they basically have to think that we're going to get higher oil prices. What if they think we will because of the energy transition? You know, I hear some who say the energy transition means structurally higher oil prices and others who say it means structurally lower. And I wonder if the answer is higher for a little while and then lower or something like that.
No, it very well could be. And I think what's interesting when you look at Exxon, you think about them or the other majors, their traditional business and then their low carbon business, is you said it could help their traditional business by prices maybe going up in the near term. But part of our note that we also outline is we think the low carbon business that Exxon has a little bit of a slow start versus some of its, versus Chevron and some of its other major peers out there. So we think that business even could lag a little bit out there.
Let's also compare the performance of Exxon, some of the other kind of E&P names that they've done better if they're a little bit more focused. I don't know if that's quite the right word, but even there's major questions, not about the share performance this year, but whether the market caps are ever going to approach what they were in 2014, the last time oil prices were this high. What's your own personal view on that?
You know, that's right. We're calling for, I think, a number of these names actually need a re-rate. Your point is exactly right. Where a lot of the premium names that we call premium names were previously trading at 7 or 8 times. They're now maybe at 4 to 5 times. And because of the strict capital discipline that most of my E&Ps now are sticking to, we think they should go back at least to those times. And again, if they would get that additional 1 or 2 times multiple, you could see these stocks, a lot of these stocks, go up another 30, 40, 50%, we think is very possible on some of these more capital disciplined stocks out there.
A couple of questions, if I might. Number one, they have a big share buyback coming. Is that going to put a floor under the stock in any sense, number one? And number two, at what point, you have a price target now of 50, if it gets down into the 50s, is that a point where you might change your view and say, well, look at that dividend, look at the price, maybe now it's time to nibble?
I think your first question, Tyler, I think that it does present some sort of floor, but what's interesting is even as big as their shareholder return sounds, even some of their peers are bigger yet. So the amount of free cash flow for everyone out there is tremendous. So it's really, again, a relative basis of how much that shareholder return is. So again, even though on an absolute, no question, it's a big number, we think that on a percentage, it's less than some others. And then I think on your second question, as far as what could happen on it, no question that it, again, I think with these higher prices can lift all boats there.